All right, guys, we're going to do the ETF account review here. The reason I'm doing this account is because I want you guys to learn how to trade, not follow me and make $1,000,000. It's so that you can make your own $1,000,000. Now, the chart that we played all week was Apple. On Monday, this was a chart that I was watching. It was one of my favorite charts. You can see we've got an ascending triangle from April all the way to now. And then you got another one that's forming right here on this, shorter time frame period. But this week was all of that. And so what had happened is you had this downtrend right here, pennant flag starting to break up. That was Monday's candle. And so what we did was I said, all right, guys, on the ETF account, what I'm going to do here is I'm going to buy this Apple breakout. And was able to buy it on this open range little break as it began pushing up. Now, what I did was I took partials at here 13.50, and then I took another partial for about $1, and then I took the last piece off up here, and I said, "Hey, I'm going to buy a pullback." Now, again, all I'm doing is I'm buying a breakout, right? And I'm averaging out so I can know my cost basis, and then I just took it. I said, "All right, if it comes back into this box area, I'm going to be a buyer." And so I was. Now, did I nail the bottom? No, I didn't. I bought 13.60 right here. I bought again at like 13.45 or something like that. And then I bought again like right at 13. I think it was somewhere around here. So I had those 3 absorption buys, right? So it's bam, bam, bam. Now, the rules that I use as things begin to bounce back to my original buy areas, that is resistance now because it's underneath, and so I sell at support. So as it comes back up, I'm selling that piece minimal, right? Now, the rule I have is I'll sell either all of it or about 50% of it. So if you're buying 50 shares right there, then I'll sell 25 or 50. Then as it comes back up again and hits to this other area, then I'll do it again. Does that make sense? And so at the end of the day, we actually trail stopped out our last 25 pieces. But we made some good money. Then on the next day, I was buying it within this consolidation period, looking for a breakout. Again, we were able to make some money and actually hold 25 pieces or 25 shares over. And again, all I'm doing is I'm buying support, selling resistance, right? Buying support. This was the next day. It came back in, and I was like, all right, loading up. I'm going to buy some more. And then, of course, I sold at resistance and then sold some more at resistance. And so at this point, I think we had like 50 shares left because we had 25 left over from this day, 25 left over from this day. We got stopped out of the ones over here. And so we're sitting here with 50 shares of this as it's going sideways. Now, as it's going sideways up here, for me, I'm willing to take shots at options because this is going to do something pretty quickly, in my opinion. One of two things is going to happen. You see how we have this kind of upside down L on the VP? This is not a good sign. What that means is we're top heavy. Does that mean we're going to go lower? No. All we got to do is get above these guys, right? And then their support. However, we are not. And so the path of least resistance, in my opinion, as of now, is actually down. But I'm still in this. I'm still holding. What's going to have to happen is, do we need to shake out this group of people before we fire long? If that does happen, we will come down and undercut all of this. Now, does that stop us out? Well, it's not going to stop me out because I've already taken enough money that my cost basis on these shares is below 209. However, it would stop me out of the very short dated Apple calls. Now, another thing that happened here was I put in a trade on the Apple trade saying, hey, that 220 is going to be a stop. If I was sitting here watching this, I wouldn't have stopped out, but it did stop me out because I had it on a computer. And the reason it wouldn't have stopped me out is because we were coming into a gap close. You didn't have the momentum going down, so I'd have held on to it. But I don't have it anymore. I did stop out. I lost whatever 50, 60, 70 bucks, whatever it was that we lost. But I actually got back in, and I'm not with the ETF account, but I've got like 25 with my bigger account, 25 calls for next week with my bigger account. I'm willing to get that up to about 200. And this right here, this box, is really what we want to buy off of. If it, takes out those people. Let me show you. If this is playing zones within zones within zones, understanding the overall chart. Look at this 195. Right? Beautiful 195 TTM squeeze starting to fire up. What do we need to come down to? Well, for me, this is the main point of control. I don't want to come all the way down here. I personally think that these people can hold us. If I'm wrong, I'm going to lose money. But before the 195 and the daily begin to fire out, us go up here, we may need to shake all these people out. And that will be done by breaking all the lows and then coming into this area. If we do that, I'll be taking a shot at it. If we do not, I will be taking a shot at it. Right? No matter what happens on Apple, I'm playing it. I'm already in it. Maybe I need to buy a breakout buy as we go up here to close this gap. If I need to stop out my shorter term calls to buy a month out calls, well, the earnings are on 7/31, so I would buy that series. That's this week, right? So no, that would be so anyway. When it's earnings seasons, you can't buy and hold through earnings unless you're okay with a binary event. So here's my fingers are crossed. This happens before earnings. So just to be clear, I will not hold through earnings unless I have significant amount of profits. For example, if I buy it, if it comes down here and we buy it off 207 and I buy a couple hundred shares and I sell 100 at 214, and that allows me to lower my cost basis all the way down to here, then maybe I would hold through earnings. Otherwise, I'm not going to hold through earnings. And I would never hold options through earnings. So to recap, we're buying support, we're selling resistance within the weekly candle. I mean, within the this week's pattern range right here, right? So as it came in, I was buying, and I was selling, and I was selling, and I was buying, and I was selling and selling, right? So buy support, sell resistance within a beautiful pattern, within a flag pattern that is happening on the 195 on the daily, ascending triangle all the way back to April with earnings coming up with a great company, one of the best companies in the world. This is how you find plays that you want to play. So next week, I'm going to be playing Apple again because they have earnings. It's still in effect. And I will buy a pullback down to here if we get it, or a breakout over here if we get it. My cost basis on my shares are below this area. So if we start cracking this 209-ish area, I'll stop out of everything and then reattack it, just so I can kind of start fresh digging the ditch down here. Hope this helped you guys, and talk to you later.